Hi, Michael Bull here with the Commercial Real Estate Show at RECON 2014 in Vegas. I have Dave Henry, CEO of Kimco, with me today. And Dave, you've been around this industry for a long time. You guys have a very successful public company with properties all over the country. So how do you see the market these days, tenant traffic and demand?
Well, I think you can tell by looking around this convention here with 35,000 of your closest friends milling around the hallways that the shopping center industry is back. It's healthy. It's been recovering now step by step over the past four years. 2009 was a tough time for almost anybody in commercial real estate, including the shopping center industry. But over the last 4 years, occupancy has come up, leasing spreads have come up, effective rents have come up. And the saving grace for our business is there's been virtually no new construction. So when you couple a 40-year historic low of new construction with a 5-year high of planned new store openings, you get higher rents, higher occupancies, and that's worked well for us right now.
And how many centers have you seen built, and what's the norm?
This is a country that used to build, at the peak, 2,000 shopping centers a year, and we're down to less than 100. It's starting to pick up a little bit, but still we're years away from full-fledged new ground-up development.
And how's that affecting the investment market around the U.S. for these retail centers?
Well, most commercial real estate is now back in favor. So 5 years ago, life insurance companies, pension funds, and foreign investors all fled real estate pretty good. But over the last couple years, they've all come back into the market, which is driving prices up for shopping centers and for virtually any kind of commercial real estate. Because commercial real estate, it's a hard asset. In a way, it's an inflation hedge, depending on the type of asset. The yields are good compared to alternatives. When bonds are so low and corporates and so forth, the yields are low in other asset classes. So commercial real estate, in general, income-producing properties is a good investment long term.
And these cap rates we're seeing, some people think that they're a little low, but what about the prices these folks are paying?
Well, I think you have to look at these, albeit historic low cap rates, in the context that the NOI has gone down a bit. Rents fell a good 30-40%. Market rents fell, so that impacted net operating income. So even though you're using very low cap rates on that net operating income, it's a lower net operating income than it was in the past. And so that translates to a price that's not at historic high levels and still below replacement cost. So it's still attractive, albeit expensive.
Right. And I guess some people are thinking that they're going to get ahead then of increasing rents and increasing vacancy when they buy at these lower cap rates, right?
Right, and some of it's defensive, as I mentioned. If you're worried about where interest rates and inflation is going to go, owning a good income property where you can adjust the rents over time is not a bad way to play the game.
Right. I'm a real estate broker, so I believe in that one.
Good.
And what about your initiatives here at Kimco this year?
Well, like most of the large public companies that are in the commercial shopping center business, we're all about taking advantage of today's good sales market to sell some of the lower quality assets that we have, buying higher quality assets in some of the gateway cities, the primary markets. So it's all about recycling capital today. So you sell your bottom, you buy better quality, you get a better multiple on your stock, hopefully better growth and income over time.
Okay. And another subject that people are interested in today is e-commerce and how that's affecting the real estate market and the retail market out there. What do you see?
Well, you have to keep e-commerce in perspective. The headlines are it's going to put everybody out of business that's in a brick and mortar business, but I'll give you a couple fun facts. 94% of all retail sales still occur in brick and mortar business. 2/3 of consumer spending are on services. So whether it's dry cleaners or barber shops or restaurants or health clubs, those things are very difficult to do on the internet, and that'll provide demand over time for brick and mortar space that's well located. So I think e-commerce is definitely having an impact, but it's been more than offset by the fact that there's been no new construction and continued population growth in the U.S. at 2.5 million people a year.
So I can't work out online.
Not quite yet. Maybe in your dreams.
That's right. I'd be in good shape.
Yeah, there you
Dave,
go.
thanks for joining us
You're
today.
very welcome. Nice to see you.
The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.